Wall Street slammed as recession worries mount. U.S. inventory indexes tumbled on Thursday, with growth shares bearing the brunt of the sell-off, after the Federal Reserve's largest fee growth considering 1994 to combat decades-high inflation fanned issues of a recession. All of the 11 main S&P sectors fell in morning alternate. Energy and consumer discretionary sectors have been the pinnacle losers, down 4.2% and 3.6%, respectively. Megacap boom firms Amazon.com, Nasdaq, AMZN, Microsoft Corp, Nasdaq, MSFT, Apple Inc., Nasdaq, AAPL, and Tesla, Nasdaq, TSLA, Inc. slid among 2.5% and 6%, also compelled via rising U.S. Treasury yields. The benchmark index snapped a 5-session dropping streak on Wednesday after the Fed's 75 foundation factor rate boom matched market expectations. Equities were underneath strain for maximum of the year on developing worries about surging inflation and better borrowing prices, with the crucial bank's trendy projection of a slowing U.S. economy and rising unemployment inside the coming months handiest fueling those worries. We view it as increasingly more probable that a recession and higher unemployment could be essential to tame inflation, with the sort of gloomy macro picture looming over the markets, stated Gare Lode, head of world equities at Federated Hermes NYSE, FHI, Limited. Wells Fargo, NYSE, WFC, said the percentages of a recession now stand at extra than 50%, following the Fed choice. The S&P 500 is down 22.6% year to date and is in a undergo market as investors grapple with a sharp slowdown in increase. The Nasdaq Composite and the S&P 500 indexes have been set to mark their 10th weekly decline in the past 11 weeks. Technically, the market stays vulnerable, stated Peter Cardillo, leader market economist at Spartan Capital Securities in New York. The Fed rally is fading as traders question the vital financial institution's capability to orchestrate a smooth landing. The bear marketplace is in full force still and but to reach a level wherein shares can with no trouble leap off of. At 9:56 a.m. ET, the Dow Jones Industrial Average turned into down 692.04 factors, or 2.26%, at 29,976.49. The S&P 500 became down 105.57 points, or 2.79%, at 3,684.42, and the Nasdaq Composite became down 355.94 factors, or 3.21%, at 10,743.21. Among major U.S. banks, Morgan Stanley NYSE, MS, led losses with a 4% slide. The CBOE Volatility Index, additionally referred to as Wall Street's fear gauge, rose to 31.51 factors. Declining troubles outnumbered advancers for a 15.15 to 1 ratio at the NYSE and for a 7.14 to 1 ratio at the Nasdaq. The S&P index recorded 1 new 52-week highs and 78 new lows, at the same time as the Nasdaq recorded 3 new highs and 400 new lows.